Heidi ho, everyone, and welcome aboard. It is hump day. Hang on, see if I've got my microphone open. Yes, it appears that I do. Very, very good. How are we all doing? Having a wonderful hump day, I suppose. And that's a good thing. I have got some good and bad news. The good news is here we are. The bad news is it is a US bank holiday coming up, which is, of course, one of those times where we expect just a little bit of nothingness. But do we expect nothingness? And is it going to be nothingness? Is it going to be volatile? Who knows? It's a very, very difficult thing to do. One thing that we do know, of course, is that when we do have a bank holiday, the potential for quiet periods is very, very much there. And of course, today is pretty much a worldwide thing because we are actually celebrating the end of World. Oh, good, John, excellent. World War One, which is a bloody good thing that happened, of course. And since then, we've had another one. And some would say we have been on the cusp of number three at times. I'm certainly hoping that's not the case anytime at all, much less soon. Okay, so why do we not trade on, well, I'm not saying don't trade, but what I do say is during public holiday or bank holiday times, it's very much a case of take it very, very, very carefully. If you want to have it's not just me saying this, of course, the whole world of education around trading will tell you that it's never a great time to be trading when the US and or London are on holiday. And the reason, of course, is that that's when most volume is in the market. That's when most institutional traders, in particular banks, are at their desks and trying to did I say that? Trying to find a way into making money for their clients, of course, which is the bank. And I just brought up a little treatise of this from a place called Forex Academy. I just stumbled on it and thought that maybe you would like to read that. It's here. Actually, I'll share it with you. I won't read the whole damn thing, but I will just share it with you. If you're in rather any doubt as to why it's never a great idea to be trading, in particular, serious money on a bank holiday, then that's a pretty good little read. Only take you 2 minutes to read it, but it does give you a good overview of why that might be the case. Of course, a lot of us will, myself included, if I wasn't talking to you guys, I would probably be in bed now and not worrying about the market too much at all, to be absolutely frank with you. But that said, there's always something to look at, and there's always something to do around trading. So let's get into that and see what we can come up with. I'm actually going to show you guys how I approach my trading week, day, hour. I think that might be a reasonable thing to do because a lot of you won't know exactly how I do go about that because all you do is see these weird and wonderful trades or not, going, what the hell is he doing? Well, it's all based on a formula, really. And the formula starts, these days it starts on a Sunday. It used not start on a Sunday because I, forever and a day, never traded on a Monday. And therefore I really didn't need to do anything until, well, to be honest, sitting down in front of the charts on a Tuesday before, maybe half an hour, maybe an hour before London Open. And all I would do is go through Thursday's charts, which is the last time I traded, and then compare them to what had happened on Friday and Monday. And if I had a view change based on that Thursday, Friday, and Monday price action, then I would adjust accordingly. But these days, it's a whole different process. And the reason for that is there's a whole lot more to consider. things like Brexit, things like Trump being elected, things like Trump maybe not being elected this time round. And my goodness gracious, how that's ever going to work itself out. Well, legally, I guess that seems to be the way it's going. And he'll throw plenty of money at that. My goodness gracious me. I don't know how we get to these situations, but there we are. We're in a situation where a country has voted for a president, and the outgoing president, and many predicted this would happen. The outgoing president ain't budging, guys. Very, very interesting. We've got a couple of months to work that out anyway before the takeover is due. So here's how I go about it, guys. The very first thing that I will do is use a tool. Now, I never used to use this tool, but I find it very, very useful these days. I'll go to this chart here. That should do. And bring on a little tool that ATW has developed. I'm not promoting this in any way, but it's a good thing. It's called the Market Scanner. And it's just a lazy way of going about things, really, for me anyway, because I don't use any of the indicators on there. But what I do is use this little tool. I go to a daily chart and I click on inside bar. Now, what that tells me, am I on a daily chart? Yes, I am. What that tells me is a whole bunch of currencies here, and it's very, very rarely that big. And I don't know why it's showing me all of that. That's very interesting. And the reason I look for that is because when I get an inside bar, and there's many, many ways to trade inside bars, I only trade them really in association with something else. And that something else is generally a market direction bar or a key reversal bar. So if I don't find any inside bars, I directly go to market direction bars. So what I'll do is I'll go through here and I'll start up at the top and work my way down. And I see that Aussie CAD. I'll go a little bit tighter for you. I see that Aussie CAD yesterday was indeed an inside bar, but the bars that are around this aren't really telling me anything too much. So I'll just move straight on. Aussie yen will pretty much be similar because it is what, well, no, it won't. That's right, because we went risk off. We went risk off. No, we didn't. We went risk on big time on Monday. And that's reflected in, of course, Aussie yen, Aussie CAD, both risk on currencies. So that's why they're in a consolidating period. So Aussie yen is telling me, yes, there was an inside bar, and that interests me, especially on the back of a big bar like that. But there is a big difference in this bar compared to, say, I'll show you one that we should have traded, right, very, very shortly. And that's exactly what I'm looking for. So I'm actually looking for a bar that precedes the inside bar that actually has, if you've got a bull bar, that is, this one being a bullish bar, the low of that bar would need to have been lower than the low of the preceding bar for me to be interested in that candle, and therefore the inside bar. So if I don't see that, I just move straight on because it doesn't mean anything to me. If, however, this candle's low was lower than that candle's low, then I'd definitely be interested in the inside bar. So I'm not, so I just move on and go to CAD yen. And CAD yen, hello, there we go. CAD yen, same story. The low of this bar is not lower than the low of that bar. So I just move on to Euro CAD. Now, I don't have any preconceived idea here until I find something that interests me. Again, we're going the opposite way this time. The high of this candle is not higher than the high of that candle, and therefore the inside bar doesn't mean anything. Moving on to Euro Yen. And same here, we've got no, Kiwi yen, same here, no. Kiwi dollar, and these are a rare bird, guys. These don't happen often, as you can see. Dollar CAD, and that's why they're so good when they do come up. This is one you can actually write in your little black book because it's a really, really cool thing. Dollar CAD, come on, you can do it. I don't know why my chart is so slow in changing, but there you go, dollar CAD. Okay, this is interesting. We've got a candle here whose low is lower than the previous, and then we've got an inside bar. Now, my rule here is that I will trade the inside bar in the direction of that candle. So in other words, if the low, this has got to close on or near its high, right? This is the other rule. The low is lower than this low, and it's closed on or near its high. Now, that's a visual thing, basically, that hasn't got a rule about it. So I haven't written a rule for that because it's really not my strategy. I don't know how to describe it to you except, okay, if that looks like a reversal bar, and that's a perfect reversal bar for me because it's got a black body, right? If it had a white body, it would still fulfill the criteria that I've just mentioned, but it wouldn't be as appealing to me. But that's not the bar we're trading. We're trading this bar here. So when we see the key reversal bar, which this is a key reversal bar. So is that a key reversal bar? So is that a key reversal bar? Why? Because the high of this bar is higher than the high of that bar, and it closed on or near its low. Same here. This candle, the high of which is higher than that high, and it closed on or near its low, not on its low, but near its low. And that's the question you've got to ask yourself here. Are we on or near the high here? Well, it's easy to say now because the inside bar has produced an entry. Hasn't produced any money yet, but it's produced an entry. So that's what we're looking for. We're looking for a key reversal bar followed by an inside bar, and we trade in the direction of the reversal bar. So in other words, we're trading long here, stop loss here. And that's exactly what I'm looking for. So did I look at that this morning? Yes, I did. Did I feel like I wanted to trade it? No, I didn't. Why? Good question. Probably because I thought to myself, and only to myself, didn't tell anyone else, that we were in such a position here that the US dollar is still likely to go short. Now, yes, I agree that there was potential for it to rally, and maybe that's what we're seeing here. But I didn't want to trade against that at this point. That may or may not be the right attitude at this juncture, but that's exactly why I didn't look at that. But that is exactly what I'm looking for. This one's really difficult, and that one there is very, very close to it as well. But you can see this is not, this inside bar has got to be an inside bar. That's not an inside bar because the high of this one is outside the high of this one. But that's very, very close to it again. So that's the setup that we're looking for. So there was one there, US dollar CAD, US dollar yen. Come on. US dollar yen. Now, that doesn't qualify because the low of this bar is not lower than the low of that bar. US dollar Sing. Don't look at that normally, but that would qualify. Closed on or near its high and inside bar. Lower low than that one. So that's one that qualifies. You've got to be fairly ballsy to take those positions when you're right down here. That's a fact, because it looks for all intents and purposes as though this is broken clear of support. But of course, it is a key reversal bar. So that needs to be taken into consideration. I don't trade gold and silver, so I would just immediately say no to them. But if I have a look at gold, that is a key reversal bar without question. That is an inside bar without question. and it has gone bang, bang on the monthly pivot. My goodness, if that was something else, I'd trade it. I don't know anything about gold and gold trading, so I'll be definitely staying out of that one, but that is exactly what I'm looking for. Key reversal bar. Actually, there's another part to that I haven't mentioned. We have to be in a primary trend that is going in the direction that we want to trade. So that would probably eliminate this because gold's been on a tear, right? So the primary trend here is definitely up, right? There's no doubt about that. The primary trend is up, so we could only trade that long. So that would eliminate. See, what happens if you only get half the information, guys? Sorry about that. I could have got you all excited for no reason. So going here, we've got a key reversal bar and an inside bar. We've got a trade in the direction of the key reversal bar, which is going this way, and we would have to then go short. We can't go short because the primary trend is long. Now, that was probably the case with dollar CAD as well, yeah, because the primary trend there on dollar CAD, that's probably why I didn't take it, yes, is bearish. So there's no way I could trade that long. So that's part of the equation as well. Sorry, I did forget to mention that, and it's very, very important. So silver is exactly the same. The primary trend has to be in the direction of the key reversal bar. So the primary trend here is really arguable, I suppose. You could say, you'd probably have to say it's bearish though, although there's a massive, massive spike up there. So going on that, if you come back to a bearish trend, I'd be prepared to say, okay, that's tradable. Silver is actually tradable. The primary trend is bearish, if you consider that to be the case. It is arguable, I've got to say, but that would be a trade. So key reversal bar, inside bar, trade the inside bar on the daily chart. So you'd be looking to enter underneath that bar, stop loss above. It's silver, so I won't be doing the pertubers. I don't mind this setup, actually. Look, I might give this a try, guys. I don't trade silver, so I'm going to just trade this at a massively small amount of money. Is there such a thing, massively small? That's called tautology, isn't it? Silver. I don't even have a silver chart. All right, let's create one. Silver, there. Okay, let's pick a template. Let's go blank and see if we can actually say that we've got a primary downtrend. Yeah, it's tough, isn't it? I would say, okay, I'll say it's a primary downtrend. We'll trade it, but we're going to trade it at very, very small risk. So if we do any damage here, it won't be much damage. All right. So the reason I like this, apart from the fact that we do have the key reversal bar followed by an inside bar, is that I've got bang, 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 3 low test bars sitting on a support trade line. Happy days. So I'm going to place an order here, and we'll come back and check this tomorrow, guys. We're going to go short at 23. Now, what does that mean? 8975. I don't even know how to do it. 238975. So let's go with 23897. Let's see what happens. You can see I'm all over this silver thing. There's my order box. So look, 1/8% or something I'll put on this. And we're going short. At, what did I say? 23897, I think. And I've got no idea where that's going to put me in. 23.897. Stop loss. Is it going to show me? No. 24.07. That'll do for now. Right. It looks like the entry's okay. Stop loss is not. The stop loss is going to be 24. Do I go 491? I don't know. Let's see. I shouldn't be doing this. This is a very bad example for you guys. 23,491. Is that what I said? 24,391. Why won't it let me do that? 24,391. This is one of these things you don't do at home, right? That doesn't look right either. Let me try again. High of that bar is 24,491. Righto, we'll get it right. Uh, 24,491. There we go. Okay, that looks a bit better. So we're trading this bar here. We're trading it short. TP1. So we've got, to my mind, what's that, 63 cents or something, I guess, 61 cents. And that's half of that. So that'll do for a TP1. And a TP2, that will do there. So I'll just put those in. If you're interested in following this, I don't suggest you trade it, guys, with any real money. But it does fulfill my criteria for a key reversal bar followed by an inside bar. So the strategy is intact. 23.54.28 is the TP1 level, and 22.5868 is the TP2 level. Let's see how that goes, and go back to where we began. We may nearly get to the point where I show you guys how I actually line everything up for the week. So we were looking at silver. We've traded silver, and we found that we were looking at inside bars, right? There we go. So we've come to the end of that. If I don't find anything, or if I think that there's nothing worth trading, I'll go to market direction, which is pretty much exactly the same thing without the inside bar. So a market direction is generally a key reversal bar. That's a key reversal bar. Key reversal bar, remember, its high is higher than the previous candle's high, and its low is on or near. Its close is on or near its low. So that's the key reversal without the inside bar. And as you can see, worked a treat. Got to take into consideration the primary trend, however. All right, so if I can't find anything there, I will then simply go, and if I find one or two things there, I generally just trade that, and that's it. And I won't do anything else, because sadly these days, well, not sadly for me, because I've got a strong business to run, but I'm not in front of the charts very much at all these days. And that frustrates the heck out of me at times when I'm trying to trade, because you tend to miss things. And those things are very, very, very frustrating. And I'll show you a few of them very, very shortly. But if I don't find anything in those two, then I'll go to the ultimate disgraceful thing to do, and that's go through every pair on the board here. It doesn't matter what's over here, or whether they're red, blue, green, or brindle. It doesn't bother me. I'm simply looking for probably now tops and bottoms of ranges, like this one here, EuroCAD. I'm looking for ranges that I haven't got on my charts, which may or may not be there. or I'm looking for a candle pattern. And if I find a candle pattern, then I'll go back and do the analysis on the pair and go through those sorts of processes. So I won't bore you with any more of that. That's exactly how I find my bias on each and every day. And during the Sunday analysis, I go through every one of these as well. And if I can find something of interest, then I'll put that on my watch list. Now, I was talking about missed opportunities because you can't be in front of the charts at all times. What did I have this week that was an absolute ball terror that I will show you, which was, in fact, one of what I've exactly just gone through the process of, and it was pound Swissy, right? Now, pound Swissy, you would think, how the heck am I going to trade this in this mess? But guess what we saw, guys? We saw, and I won't give you the onerous task of trying to see this because it's in a whole mess of things. But this is how good this can be. And I'm not saying that it was the reason that this rallied. Of course it wasn't. But it is, in fact, a precursor to what came next. So that bar there, right, is a key reversal bar. The low is lower than the low of the previous bar, and it closed on or near its high. The next bar is, in fact, an inside bar. It's a bloody big one, but it's an inside bar because its high is lower than that high, and its low is higher than this low, which qualifies it as an inside bar. And we called that. What did we not trade that? No, I don't see it in my winning account, so obviously we didn't. It was a double cross of the monthly pivot and the weekly pivot as well. How did we not trade that? Probably not. I don't know. I can't answer that question because that's a standout that is really, really difficult to spot unless you're on top of it and watching for those things every day. And that's my point, really. If you have a system that works for you, and it doesn't matter whether it's this system or any system, any way that you find your trades, my point is, if you go through that process each and every day, then you shouldn't be missing these if they're on a daily chart. And I shouldn't have missed that because that's just a prime example of what I've just described to you. That might be it. Primary trend. That's why. There you go. The primary trend was short, so I couldn't trade it long. Whew. There you go. The good part is you can experiment with things like that. So the rule of primary trend has to be short may not be applicable in certain circumstances. What's the circumstances? Well, we've just come back inside a range. We've got a lower, so we've got a higher low. Yes, we're coming out of consolidation, but does that mean we can then overrule the primary trend? Do we overrule our rules, guys? No, we don't. We have to look at the exact situation and go, all right, this happened today. Has it happened before? Is it going to happen 2 out of 3 times? Is it going to happen more often than it doesn't? That's the kind of thing that we need to know, right? That is where we find our true reliable systems, by not saying, okay, it worked once. Once does not a summer make, guys. We've got to do it and do it often. How do we recognize that? Journals. You got it. Journals. All right, guys. I've got no intention of trading, I suppose, outside of what I've already given you. How's silver going? Which is why I thought I'd just give you a little insight as to how I go about my business. And my chart's frozen. So I actually can't show you silver. Somebody will tell me. Here we go. We're unfrozen. And And, oh, where's my trade? I must have it's on a different, different one, that's why. Different account. Okay. Come on. Silver, there we go. All right, we're in the trade. Happy days. Let's see how that pans out, guys. I'm going to leave you. Those of you who are in the US session proper, we'll be back in a couple of minutes. Those of you who are not, hopefully that wasn't too boring on a public holiday or a bank holiday in the US, and indeed on Remembrance Day or Armistice Day, whatever you want to call it. Poppy Day is another one. Hope you're having a good one, and the rest of it is kind to you. In the meantime, those of you who, as I say, are US session subscribers, we'll be back with you in just a tick.